Hello, my name is Kevin Hollifield, a student at Indiana Wesleyan University, and today I'm going to talk about cash flow statements. I think cash flow statements are very important in any business because it takes cash to pay bills and to generate future income for a business. The actual term cash flow represents the cash receipts and the cash payments of a business. The statement of cash flows reports on a business's cash receipts and their cash payment for a specific period. Here I have a simple example of what a cash flow statement would look like, although sometimes there are a lot more factors that will be included. For the sake of example, I've just done a simple look here. So you have the cash received from your different inputs there, whether it be clients or customers or other miscellaneous. And then you have all of your expenses and or liabilities in the outgoing. And typically at the top you have an opening balance at the beginning of the year, and then you can measure this throughout the year. So at your bottom line is going to be your net cash flow from all operations. The purpose of a cash flow statement is to predict future cash flows, evaluate management and their performance, and to predict the ability to pay debts and dividends. Three classifications of what you might see on a cash flow statement are operating activities, and these are activities that create revenue or expenses in the entity's business. Investing activities, these are activities that increase or decrease the long-term asset. And finally, financing activities, and these are activities that will increase or decrease long-term liabilities and equity. All of these three classifications are a section of the statement on a cash flow. When applying this term, you can look at it from each level of a professional. As an entry-level professional, understanding the statement will help build a good basis for understanding future financial statements. As a mid-level professional, you will use this to observe and organize how your product lines are generating revenue. Also, typically you'll be required to show this to upper level management as an evaluation of your performance. And as an executive level professional, this statement will help grant you visibility into the cash flows of your business and decide where the money's, or be able to see where the money's going and decide if you would like to make adjustments, and the goal of that is to create maximum profitability within the organization. I somewhat struggled to find an ethical connection here, but what I did think of is when you're running a business, cash is obviously very important. However, thinking about people who work for the company and who are doing the day-to-day to earn that money are very important too. And I've seen this at times where leadership fails to recognize and maybe reward these labors. I know a business has to have money and needs money to survive, but it's not the only thing that's important. I think that sometimes when people get too concerned on the money, then they forget about some of the other things that are important, like the people, for example. And I found a biblical connection here as well, that is from 1 Timothy, I believe, and it reads, "For the love of money is a root of all kinds of evil. Some people, eager for money, have wandered from faith and pierced themselves with many griefs." I thought that was a good connection, just because if you only care about the money, you're missing out on a lot of other things, and I think that, in itself is an ethical situation that you don't want to be in as a business owner or any level of profession. Thank you for watching. Again, this has been on cash flow statements. My name is Kevin Hollifield. Here are the references I use, the text from the book, an Excel website, and the New International Version of the Bible for that Bible verse. Thank you.